Hello and welcome to Earnings Echo. We put together the most important information about Figma.
We're diving into Figma's Q4 for fiscal year 2025. And to put it simply, this was a clear beat and raise, a really pivotal quarter for them.
Okay, let's get the hard facts on the table right away. How did that top line look against what the street was expecting?
Revenue came in at $303.8 million. That's a reacceleration to 40% year-over-year growth, which, easily beat the consensus of around $293 million.
Reaccelerating to 40% at that scale is
Yeah.
it's impressive. How did that flow down to the bottom line?
So non-GAAP net income per share was 8 cents. The GAAP number was a loss of 44 cents, but honestly, the market's reaction wasn't really about that.
It was about the guidance.
It was all about the guidance. The stock jumped, 16% in after-hours trading?
So break down that outlook for us. What are they telling investors to expect for fiscal 26?
For Q1, they're projecting revenue between $315 and $317 million. That implies about 38% growth. And for the full year, they're guiding to a range of $1.366 to $1.374 billion.
So investors are seeing that this growth isn't just a one-off. It's sustainable.
Exactly. That's the core reason for the move.
All right, let's analyze the operational drivers then. Where is this growth actually coming from? Is it just new customers or is it something else?
It's heavily weighted toward expansion within their existing base. The critical metric here is net dollar retention, or NDR.
Right.
It rose to 136% for customers with over $10,000 in annual recurring revenue.
And for anyone listening, anything over 120% in SaaS is considered excellent. 136%. That suggests the product is becoming, essential.
It's becoming infrastructure. They're embedding themselves deeper. And they're also landing larger customers. Paid customers contributing over $100,000 in ARR grew 46% year over year. That's 4,405 of them now.
So is this all coming from the core design tool, or are the newer products finally starting to catch on?
This is where their platform strategy is really paying off. Weekly active users of Figma Make grew over 70% just in one quarter.
70%, wow.
And here's the key stat. Over 80% of those Figma Make users on full seats were also using Figma Design.
That's the vital number. It proves Make isn't eating into design. It's an add-on. It connects the developers with the designers on the same platform.
Correct. It shows extreme platform stickiness and very successful cross-selling. Plus, international revenue grew 45% year over year, which is outpacing the overall rate.
Okay, let's shift to the earnings call itself. What was the tone from management?
Confident, cautious.
Extremely confident. CEO Dylan Field literally called Q4 our best quarter yet, and 2025 a massive year. The whole narrative was about Figma moving beyond design to own the entire product development process.
And I'm guessing AI is the main lever they're pulling to make that happen.
Oh, absolutely. There was a lot of talk about AI integration. They specifically called out new features with Claude Code, which lets you bring UI generated in Claude directly into the Figma canvas. And new AI image editing tools are coming too.
But that kind of AI development isn't cheap. How is the CFO planning to pay for all this? That's the strategic trade-off they're making. CFO Pravir Milwani pointed to their strong balance sheet. They have $1.7 billion in cash. But he was very explicit that 2026 would see accelerated investment in AI.
Which means a hit to margins. How significant are we talking?
It's substantial. The non-GAAP operating margin guidance for fiscal 26 is about 8% at the midpoint. That's a drop from around 12% in 2025.
So they're directly trading today's profitability for what they hope is a long-term AI moat.
Precisely. They also flagged some seasonality for Q2. Operating income will take a hit from the cost of their annual config user conference.
Good to know.
Yeah.
So if we bring this all together, how has the investment story for Figma really shifted with this report?
The story has clearly evolved. It's no longer about a pure play design tool. It's now about an AI-powered end-to-end product development platform.
And if you had to distill this all down to the single most important echo for investors?
The critical takeaway is that their transition to a multi-product platform design, make, and dev mode is working. It's what's driving the incredible 136% NDR. Figma is using its current financial strength to aggressively invest in AI, betting that owning the entire product stack is the ultimate prize.
A calculated risk for sure.
It's a very calculated one.
And finally, the obligatory disclaimer. All content in Earnings Echo is AI-generated information and does not constitute investment advice. Investing involves risks. We assume no liability for your investment decisions. Do your own research before taking action. Numbers checked, portfolio prepped. Catch you again soon.